Hey guys, this is a market update, a very pivotal time for Bitcoin right now because it seems to have shaken its correlation with the stock market. And this is obviously a good sign because the stock market is just going nuts and people are losing their minds. Everything's getting sold off in stocks, but Bitcoin looks super strong. You can actually see it here, up 0.6 on the day. But considering the massive sell-off in the NASDAQ and the S&P, different areas, Bitcoin has actually held up pretty well and hasn't capitulated like some people were expecting. I want to go through some of the reasons why that's happening because there's just a ton of stuff right now that is super confusing. The market is confused and that's why the stock market is selling off. Bond yields are much higher. How does all this play into the price of Bitcoin, Ethereum, kind of over the short term? There's a lot to get through. So let's get right into the video and we're going to look at the Bitcoin price, Ethereum price charts just now. So firstly, like I said, Bitcoin, it's held up pretty well, right? 42,000, we're not going anywhere. Volatility has decreased, but considering the capitulation that's happened in the NASDAQ, which has been obscene for a lot of those names, Bitcoin has had a massive sell-off, but seems to be stabilizing. And this is quite positive news for Bitcoin. And it really is because I think Bitcoin is not just a risk on long duration asset with lots of cash flows in the future, like those NASDAQ names. Bitcoin for some people is literally a lifelong store of value. And so it's a very different asset to the NASDAQ. And that is why it's very good to see that the correlation, basically it's not selling off like the NASDAQ is. So let's have a look at the price chart initially. So this is Bitcoin. You can see we're just stuck in this range, right? So what's happening now is obviously, we're in a risk off mode, really. So what we actually saw, if you look at the price chart on Bitcoin yesterday, is you got this spike up and this was great, but obviously it got sold off. Now that's just happening in the market right now. Any bid, any kind of up move in prices just gets sold into. So if you are looking to accumulate cryptocurrencies kind of in the first half of this year, just know that you do not have to chase prices ever. If you see a price that is going up and it's maybe up for a couple of days, just wait, because it is probably going to get sold into at some point and you'll have a better lower entry. Just my opinion, of course, but that's what we're seeing. And I think that's going to kind of roll out at least for the next few weeks, probably months. What we can see with Bitcoin really is that it's just consolidating around this level. This is actually good news considering the sell-off in the NASDAQ, so 42,000. This key level at 40 still holds. We're quite a way away from it. I've got another level down here at kind of 37.5. If we really do see some sort of sell-off, and there may be one scenario where that happens, which I'll touch on in a second. But for now, Bitcoin really is just behaving itself. We've had a massive sell-off from the high, but to be honest, overall, this isn't a massive sell-off in the big scheme of things, and it looks fairly stable now considering what's happening in the wider market. What we can also see with Ethereum, and Ethereum is a very different investment than Bitcoin. For a lot of people, Bitcoin is that buy and hold forever, whereas Ethereum is slightly more risk on, right? So people use Ethereum when they're, when the economy's going well and they have a bit of money in their pocket, and they want to do some Web3 stuff. They want to buy some NFTs. Maybe they want to, lend out some money, to get some extra yield and stuff. All that DeFi stuff, when you've got a bit of extra money in your pocket, that's where Ethereum might come into play. You can see it's kind of faring, a little bit worse than Bitcoin. It's off more this week, but again, there is a very strong support around this kind of 3,000 level just above, and we're kind of not near it now. So in terms of the capitulation from the NASDAQ and everything that's going on there, these two names look fairly decent, to be honest, and not capitulating. This is a really great chart from Will Clemente on Twitter. You can go and follow him, some great analysis. You can see exactly what we're looking at. In blue is the NASDAQ and in orange is Bitcoin. And you can see essentially they've been very correlated over the last few weeks, both selling off, right? So a risk off move and, money coming out of risk assets going into cash basically. And so they're correlated, they're both selling off. But this huge move here, and this is really interesting to say, you know what? The market has obviously changed some of its thinking in what's going to happen. And there's a few reasons for this. First one is treasury yields, and I'll get onto that later on in the video. And the second one is, with the variant kind of coming down, people are thinking there may be quite good growth in the kind of next upcoming figures, economic figures. There might actually be decent growth coming kind of into the spring because of all the lockdowns kind of ending. And so you might see Bitcoin doing this because it essentially seems to react a lot quicker to these things than the NASDAQ, which is influenced by a lot of different things than Bitcoin. If you want to use Bybit like you saw me using here, you can actually get a deposit bonus when you sign up for Bybit. I'll leave that link in the description. If you deposit some crypto on account or just put a deposit on account, you can get up to $4,000 worth of a deposit bonus in your futures trading account if you want to go ahead and take advantage of that. I'll leave the link in the description. I want to talk about interest rates and the yield curve and why it's important for markets. Also, just a quick update on my crypto investor course. 25 new videos are coming to this course this Sunday on the 22nd of January. Everyone that is in the course and in the private groups, you will get these videos for free on Sunday. So look out for those. The price is going up probably the first week in February. If you want to get involved in the course, see my portfolio and my trade alerts, all of that is on moneyzg.academy. I'll leave the link in the description if you want to go ahead, check it out. So this is treasury yields, and this is what's really moving the markets and what can tell us what the market is now thinking is going to happen in the future to economic growth and also the Fed's response to it. So in 2021, really the Fed came out and said, we're going to move interest rates to zero and we're going to print lots of money and buy assets, basically buy bonds, their own bonds. The market is very certain when this happens. So the market knows, okay, all we have to do is just buy everything because everything's going up. Risk assets are going to go up in value. Bonds are going to go up in value because the yield's going down. Bond prices go up. The yield goes down because they redeem at par, which is 100. So obviously you have to work out the yield. So everyone knew where they stood. Now what the Fed has done is said, we're not doing that anymore. And the market is uncertain. And when the market is uncertain, this type of thing happens, these sell-offs, these rotations, and that is what has happened in the stock market, in the NASDAQ, and in crypto, to be honest, because crypto is very uncertain as well. And so that's why you see this sell-off. What these are treasury yields. So these are the official rates for US treasuries. And you can see down here on the 18th, you can see that the price was fixed for the 10-year at 1.87. Why this is important is essentially to borrow money in bonds, you have to pay 1.87%. That's moved up from 1.63% just a couple of weeks ago, which is a huge move in treasury yields over such a short period of time. Treasury yields can tell us exactly what the market is thinking of what's going to happen. So here's how the yield curve works. Every single risk asset, Bitcoin, the NASDAQ, everything that you're looking at is priced off of this. So this is the most important thing to know. So what usually happens is you'll get a risk or a yield curve that looks a little bit like this. So basically you have duration and up here, so this is duration and this is yield or the percent that the bond yields, right? So what you do is obviously the longer the duration of the bond, the higher the yield that you're supposed to get. And then as the duration is shorter, like a 2-year or 1 month, right? If that's 1 month, you get a very low yield, right? So this has to do with the time, time value of money and obviously risk. The longer that you borrow money or lend money, right? So the more that you need. So this is like a normal yield curve, but also you can get changes in the price of interest rates. So this would be an inverted yield curve. This means that the price, the price that you pay for money in the short term is much higher than the price that you pay for borrowing long term. This is not good. This means that people or the market think there's going to be a massive recession, because when a recession hits, you have to drop interest rates, stimulate the economy. This is not good, right? An inverted yield curve. We don't have that yet, but what you can see by treasury rates is essentially there is a bunch up in the middle of the curve, right? So what's actually in the real world happening right now is what we're seeing is kind of normal on the short end, but then you get this kind of bump here, and then it's kind of flattish again. So what we're seeing kind of here in the kind of 5 to 10 year is a bunching of rates, right? So the 5-year is 1.65, the 7-year is 1.82, so kind of a big move, the 10-year 1.87. You can actually see the 30-year is actually cheaper, pays less yield than the 20-year. So what this means to me really is that the market is kind of uncertain and doesn't know what's happening because the Fed has said, hey, do you know we're going to raise rates right now, but we're not going to tell you how much we're going to raise them by. Could be 25 basis points, could be 50 basis points. If inflation gets out of hand, we're going to really hit the market hard, but it may not get out of hand. The market doesn't know those figures yet. So everything the market is telling us is we're kind of uncertain right now, and that's what we're seeing with all of these risk asset prices just selling off. Why this relates to cryptocurrency, do not expect any upside whilst the market is uncertain about what's happening. We're going to get the Fed coming out in probably March and raising rates. My opinion on this, if they raise rates by 25 basis points, we'll probably get a nice push up. 50 basis points is going to be a big whack to the market, and probably we won't get a nice rise up at that time. So that's a time to watch out for, and also the rates hike to watch out for, either 25 basis points or 50 basis points. Right now, consensus definitely is at 25 basis points. So what I want to come to as well is that Bitcoin is going to be a worldwide store of value asset, and this proves it if we ever needed any more proof. Intel are not going to buy Bitcoin. It's not their business to buy Bitcoin. They're not an investment company. They're a chip maker and a technology company that makes chips of various types. So this is their business. And if Intel, one of the biggest chip makers in the world, is getting into making Bitcoin mining chips, then you know this is big, and you know it's going to be a big, solid industry that is regulated and around for a very long time. It's news like this that just keeps me hooked into the crypto market, especially Bitcoin, knowing that I can put big chunks of wealth into Bitcoin because it's not going anywhere. It's only getting stronger. More companies, literally some of the biggest companies in the world, are getting into Bitcoin. And obviously it's Intel's business to make chips, but they're getting into this space. So you just have more companies coming in. You have more diversification of the asset base. You have more diversification of the industry in general. This is such a positive news story for Bitcoin. So there is huge short-term uncertainty right now, and I think some of that uncertainty is probably helping Bitcoin a little bit, but like I said, you do not need to chase asset prices in the first half of this year. If it's a green day, I would leave it and just wait for the inevitable red day that will sometime come in the future. Okay, if you want up to 4,000 as a deposit bonus on Bybit, definitely check out that link in the description. Just deposit some crypto on there and get up to 4K. Like I said, 22nd of January, 25 new videos for the crypto course for free for existing users, and the price is going to go up on the first week of January as well. Check that link in the description. Get into our private Discord groups if you want to talk to me and all the other people in there. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.